Welcome back to Tech Economy. Now, I've been covering the fact that gold is at an all-time high. And if you really want to be honest, I was talking about it way before gold made this move. So look back at past videos. Please subscribe if you haven't already. If you took action ahead of this great almost 30% move, pat yourself on the back. But let me reel it back in. We are not advocating to play gold as a short-term play here. And I feel a lot of people need to hear exactly why gold is something to hold for the long term and look at in 5, 10, 15 years. Now, gold doesn't get a lot of attention because it's not a sexy investment, let's be honest. The price doesn't move much off its spot price in normal markets, which is why the all-time high right now excites me. You see, gold, unlike stocks, has no cash flow, no dividends, and no underlying business to value. It's not a bond with promises to pay a certain interest rate over a fixed period. It's just a shiny yellow metal that takes on the value that the markets assign to it. But still, there's gold bugs out there, kind of like myself, the true believers that love gold for its history. And some people out there hope that it will act as a store of value when inflation runs wild, kind of like it is now, and for the intrinsic value that fiat currencies lack. They believe it will survive when the apocalypse comes. And let's put aside the fact that guns, food, water, and land is really going to determine who is rich when civilization comes to an end and who is dead. Sorry to be morbid there. Now, an article that was run on Barron's, and I'll talk about that later, talked about how gold is not just a short-term play, and it could go up for the next 10 years. So naturally, I had to check that out and see what it was all about. But first, let me digress. Let's talk about how gold has historically done in bad economic times, like the ones we're in right now, and the one I think is going to get even deeper and deeper and worse in 2024, election year. Very important to know. Gold gained 56.3% annualized from the time of August 76 through September of 1980. At the same time, the S&P 500 rose 10.8%. Now that was during a period of hyperinflation. Gold also rose 20.6% from March of 01 through August of 2011. Compare that to the S&P, which was just 2.4%. And that outperformed when the tech bubble burst and the financial crisis unfolded. See a correlation there? There are signs emerging that a similar period of outperformance is now taking shape. So let's look at the relationship between gold and the US Treasury yields. Normally, when the bond yields go up, gold falls. That happened initially this time around, I'm not going to lie to you, with gold falling from $20.5530 in April of 2022 all the way down to just over $1,600 last October, as the Federal Reserve was beginning its rate increase hikes. So remember that fact. Since then, gold has still gone up, all-time highs, I just mentioned, despite the ongoing rate that increases that brought the benchmark rate from 5.25% to 5.5%. Now I quote, this is up from zero. As grizzled gold bulls know, this is far from typical behavior and would thus seem to be sending an important signal, writes Stephanie Pomboy of Macro Mavens. I looked her up, pretty legit blog. You should follow that one too. Her take is that gold is confirming the disconnect she sees between gross domestic product, which rose 3% year over year during the third quarter, and gross domestic income, which actually fell 0.2%. Now, rarely are the two measures of economic activity that out of sync. Pretty wild times. The last time we had positive GDP and negative GDI was before the recessions in, wait for it, 01 and 07. Now this screams to buy gold. And now that we're on the same page and looking at price action for the next 5 to 10 years, I ask you to look into adding it to your retirement, much like I did. There's many reasons to hold this, not just short term, but long term as well. There's a lot of companies out there that can do this. And if you want to click the link below, you'll get matched up with one of them that matches your needs, your investment timeline, and just a comfort level overall. I did this to balance my portfolio and get some exposure to both gold and silver ahead of this bull run. So I'm just giving you my full transparency and disclosure that I do have interest in both gold and silver. I talk about that many, many times on this channel, which again, you should subscribe to. So what else is driving gold's rally? Let's look at a few more hard facts that support this run and why I feel gold's gonna go for the next 5 to 10 years. And I'm closing my eyes and just letting it sit away in the vaults. We know that higher inflation or a massive recession are the absolute worst case scenarios that could drive gold prices higher in the next few years. But let's not forget about how geopolitics play a role in gold's value. The recent rally of gold began on October 6th, which is wild because that was precisely one day before Hamas attacked Israel. Wild, right? Another driver that I discussed in another video and really feel is massive is the actual shift away from the US dollar. And this is something that is just happening and we're not even getting media on it. Too much has been made about de-dollarization, like it'll happen overnight and the world will stop using dollars in transactions. That's a little far-fetched. It's not the case. But there is a change happening as countries try to protect themselves from potential US sanctions from the massive amount of debt the US has taken on. The BRIC Plus countries, which I've talked about in other videos, you can go back and watch them, in August committed to using local currencies as much as humanly possible. It wasn't just words. That exact month, India bought oil from the Abu Dhabi National Oil Company in rupees for the first time ever. That's powerful. Global banks are putting their money to work buying gold, and they're on track to acquire a record 1,180 metric tons in 2023. Don't know about you, but that tells me all I need to know. Central banks are playing chess, we're out here playing checkers. If you don't follow their moves closely, you could be in for a very rude awakening. Greg and I subscribe to many financial journals. Wall Street Journal, Barron's, you name it. We spend thousands a month, and that's in addition to our own personal research we do into this. And we take all those and we aggregate them and talk about them on this channel. You don't need to go out and subscribe and spend thousands of dollars a month like we do, because you can get all your info from us right here at Tag Economy, which stands for Tim and Greg Tag Team the Economy. Yeah, kind of corny, but we know what we're doing. We're small business owners, perhaps like yourself, with families, perhaps like yourself, looking to go out there and talk about the economy, inflation, and what to do in times of peril. Right now, I feel we're there. Take the quiz below, see if there's a gold company that matches up with your needs, either from home consumption or for putting into your retirement plan like I did, and close your eyes for the next 5, 10, 15 years and watch what happens. We're going on a massive run. I feel it. It's out there. I'm not the only one. These financial journalists talk about it. Big minds talk about it. If you're not prepared, could be a repeat of 2008. It could be a recession like you saw earlier in your life. Don't let that affect you. Protect yourself. Link below. Check it out. Thanks for watching.